All right, perfect. Starting off with the spring enrollment section. So I wanted to go over a few examples right here. I want to go over the dollar as well mainly, and just quickly going through some of the Forex majors as well. Now, I wanted to talk about the dollar right here because we were talking about it actively as well in the further targets video. And we mentioned this right here is the context area. So where we can continue higher off of. The first target on the daily time frame is that target right there. So again, if you are in a trade, then ideally this context area is where you are looking to get involved right there in that area. So on the right side right here, once we take out that high, you want to take a step back, because when we do take a high like that, we are not too sure on what can happen. We can still continue higher, but we might, like we're seeing right there, actually, like we're currently seeing, which is a huge topic that we talked about in the video as well. We might be sweeping that to then continue lower instead. Now, why might we be sweeping that? Well, if we create right here a weekly fair value gap right there, then that previous week high, that context high right there, will be responsible for the sweep. The sweep will be responsible for the move back into the weekly fair value gap as well. It's actually as well a funny deep work session that we went over, I think a couple of months ago. I'm not too sure actually when, but it was the no return theory, I believe, something like that, where usually when we create a fair value gap on a certain time frame, we take out context like we see right there. We fail to follow through with a new fair value gap higher, and then we come back into the weekly fair value gap as well. So that is very interesting right here. And again, that is why the context high, after we take that out, we need to be very careful with trying to get involved again, because ideally we want complete new context again, because if we do want to continue lower, that premium rate is exactly that premium rate that is being used to continue lower instead. So that is the tricky part about it. Now, if we go over a few more examples as well, let's take a look at Russell right here. Russell as well, quite interesting. And we can see we have different types of context, right? Because we have lower time frame context. For example, the dollar was on the daily context. Here we have Russell, which started on the weekly actually. So on the weekly right here, the only place we could still continue higher from was this order block right there. Now, we discussed this previous week low sweep right there. Whenever we sweep that and then we target this swing high right there, that becomes the context area. So if you go into the daily to see it more clearly, once we sweep this right here towards the context high right there, that is the context area on the weekly time frame. So currently we are out of context. We have no context anymore. So that is when we are being very careful with it. Now right here, if inside that context we get fair value gaps right there, then we have again that context inside that context inside that context. So how do we actually approach that? Because right here we are in weekly context, but can we just long off every 1 hour fair value gap, for example, just look at buy at every 1 hour fair value gap? Well, no, because inside this context we want to also have the proper context again. For example, if we have this daily context towards that swing high right there, once we take the gray box right here is the context area, we remove the fair value gap. Once we take out that high right there and we are not in the context area anymore, we can go down a singular time frame like we mentioned to find new context, where here we have new context again sitting right there as well. So here, this is now the new context where we drop back into that fair value area towards that high. And this is where now you have no resistance anymore towards that weekly high as well, the weekly context high. So in this example, you can very well hold, if you get involved right there, towards that weekly target right there as well. And once we take out this, now we want to wait again. So now we want to be careful again with trading the next context. Now, do let me know if there were any questions about this topic. If not, we can also move on. All right, let me repeat the question for the recording as well. Could you go over trading against a sweep and needing extra confirmation and the context overall being lower probability? For example, price action from EU yesterday in 4 hour value gap during London, I think. Let's see. 4 hour fair value gap right here. I would argue this one, let's see, what are we looking at? This one, that 4 hour value gap, we don't necessarily need more confirmation. Usually when I require more confirmation is when I am not certain on a certain bias. So even though we do have a sweep going against it right here, if we still get the proper confirmation right there, then I'm not too worried about that because I'm already quite certain on what the bias will be. As in, we're coming off a fair value area right here. To continue lower off of that, we get a 4-hour fair value gap already lower as well. So in this example right here, this 4-hour fair value area, whilst we are moving higher into that, this is exactly the moment where I would want more confirmation. So I'm not looking at this fair value area to immediately go into the 5-minute time frame, for example, because we have quite a lot of candles going against it right there. I don't really want to catch that top right there. I don't mind waiting a little bit to then get involved. So this 4-hour fair value gap is already the more confirmation that we had on the previous fair value area. So here, this is where I'm already quite convinced on we can continue lower right there. So even though we have a sweep, or it looks like a sweep right there, I am not too worried about that right now because that is where we just offer the retracement to get involved right there. But in a different example, let's say right here, we take out the context overall and we now are in no man's land. And what I mean with this no man's land is we taken out the context. When we take out that context, we have nothing to target anymore. It's almost like we're at an all-time low, all-time high. The reason I don't like all-time highs, all-time lows is because there is no target anymore towards the left. So I need a retracement to work with something. Now, if we now sweep this low right there, that is suspicious. So now I would want more confirmation in the form of this 4-hour fair value gap to then continue lower with some more confirmation on the 1 hour, for example, with a new 1 hour fair value gap lower right there. Because now we have taken out that context. Whilst here, the bigger fair value context right there that we are still moving lower from, and to give a more clear perspective, that's the daily fair value gap right there, moving lower towards this swing low sitting right there as well. So that is the context that we are working with. So on the 4 hour, we have 4-hour context inside that daily context as well. So that for me is still perfectly fine to look for an entry. But once we take out the context, we have no context anymore, and then we are sweeping something, that is when it's suspicious. Let me know if that makes sense. Can you trade sweeps when context and bias are unclear? Whoa, that's a good question. And for me, it always starts with I need to have some kind of clear context and bias. So what I mentioned, for example, on crude oil, I use this example quite often. If I am bullish and I know price is still willing to go higher and we are consolidating, we don't have clear price action, and the overall delivery is just not that nice, but we are still moving higher, then for me, it's perfectly fine to trade sweeps. As in, for example, right here, at that moment in time, I was always bullish. So every move below a swing low for me is just seen as a sweep to then continue higher. I confirm that sweep by going down a time frame to now actually see, do we have order flow confirmed? Do we confirm an intermediate low? Do we have a fair value gap higher actually confirmed right there? So I would always want, ideally, a clear bias, have somewhat of an understanding of where it wants to go. Potentially, you could make a model, quite advanced already, for where we are in spring enrollment, where you can take any swing high, swing low to trade every sweep. That could potentially be doable, but I would personally want always some kind of clear bias. For sure, let's see. Let's go over a few more examples right here. On ES, what are we dealing with right here? So ES, same example actually, very similar right there. And it's actually a good example to your question potentially as well, Joey. Could we go over a few examples of unusual context? If right here, we want to continue higher, and we'll also go over dollar because that is also potentially creating unusual context. Then right here, we have normal context, usual context right there, which might follow through higher right there, which it perfectly does. It reaches this context high right there. After that, if this is now a sweep, that becomes unusual context to actually target this low right here. So if we get, for example, 1 hour fair value gap lower, 15 minutes fair value gaps lower right there, 15 minutes order flow confirmed. Not a nice delivery, very wiki actually, very interesting. But that becomes unusual context to potentially target lower right there. Now, we do not have to get involved in top right there. That's quite important to understand because we can just simply wait for it to actually confirm that we do want to continue low right there at the last moment and then just trade that right there. Because this is always a little bit trickier than trading usual context. And what I mean by that, oftentimes at the first moment that we have a potential sweep, people start to switch biases and start to now look for shorts. No, there is a moment, at this moment in time, once we are above this high right here, or we are getting close to the high, we are bullish. When we potentially sweep that high, we do not go from bullish to all of a sudden bearish. It becomes a neutral state where you are in between that bullish and bearish, where you're like, suspicious if we want to continue higher, potentially nice if we want to continue lower, neutral. You're not bullish, you're not bearish. Whilst if we get the right confirmation and we actually get fair value gaps continuing lower, we get order flow confirmed continuing lower, that's when we can confidently say, all right, we definitely are somewhat bearish right there to target that low right there. So that is quite important to understand. That's the first part of unusual context. This is one of the examples of unusual context where we fail to follow through with a new fair value gap higher right there, where we actually sweep the high. This is very similar to the dollar situation that we have right here on the daily as well, where this might look like we are creating unusual context to then target this low. And that could be very nice because if we get, again, here I would be neutral. So right now we're in that neutral stage where I'm still bullish, as in we don't have anything proven yet to be bearish right there. We only have a singular 1 hour fair value gap lower right there, which is not enough for me. So if we get confirmation to continue lower, the closer we get towards that low, the better. Now, why that low? Well, that is where the usual context started, but right now that's also, we went over in the beginning a little bit, there's also actually the high right there of that weekly fair value gap that we are trading into potentially. So if you want to trade back into that weekly value gap, we can deliver back into that with that sweep, with that unusual context that we actually saw on the daily time frame as well. So this again, like I mentioned, is one of the examples because this is unusual context when we fail to create a fair value gap higher. That does not always, it's not always the case. We do not have to have unusual context where we fail to create a fair value gap higher. Another one that I like to have as an example is Australian dollar, US dollar right here, where unusual context right here starts as soon as this last line of defense right there fills in the last line of defense in the form of that 2 candle rejection. And the reason that is unusual context right here is because we do not continue higher off of that fair value area. So we are indeed potentially seeking that liquidity, where right now we're waiting for that usual context again to continue lower to target the overall unusual context low right there, where we create usual context right here as well to continue lower again. And we have usual context inside the bigger unusual context, if that makes sense. So I can understand if it's a little bit confusing with all the unusual, usual, unusual, all the things, but that is the way I view it. And if you need more examples on that, then feel free to let me know as well. Would unusual context be confirmed with 2 order flags on time frame below context? Yes. The way I view it is the following. So on the dollar right here, if we create unusual context right here, then on the 4 hour, I would just want a sharp turn ideally right there to continue lower. So 1 order flag lower is enough right there. This is also where we then eventually go into the execution month, where it will become a lot more clear. Ideally on the 1 hour, I would want to see order flow confirmed right here, to then have a new 1 hour order flag continuing lower right there, to then actually target the unusual context low sitting right there. That's how I would want to go about it. Let's see. Can you take a look at Euro JPY, especially 5-minute price action after trading into the most recent 4 hour value gap? For sure. Euro JPY 4 hour fair value gap right there. So it's a good example again. And it's actually a really good example as well, what we went over, trading against this potential sweep. So right here, and let me get some clear context what we are doing overall right here. We have this daily context right there from that fair value gap towards this low right there. So context is taken. That's the first important thing that I want to know. I always want to trade ideally in some form of context. That is my ideal scenario. We are about to create a weekly value gap, which most likely we are going to trade into next week as well. So on the daily, we have taken that context, that swing low. On the 4 hour right here, that's also same swing low. So this is where it gets extremely interesting because what we mentioned a little bit earlier, trading against a sweep, ideally when context is just taken and we have taken some quite nice context right there, I would want to see a perfect run on liquidity and not a potential, even if it's the closest sign of a potential sweep of liquidity, I do not want to trade that. So right here, we have a potential sweep because we do not have a fair value gap overlapping with that exact low right there, which I personally do not like. Yes, with this low, but this right here is actually the daily context low right there. So personally, I would not want to trade that personally. But if we do go into the 5-minute time frame, let's see what we are dealing with right here. Then we have this 4-hour fair value gap right there, which is the gray box. We have order flow confirmed, actually continuing lower, sweeping that high right there. We have this 5-minute fair value gap lower. We're not pushing lower from that. If we are not pushing lower off of this order flow leg, then there can only be one valid explanation. And that is that above this high right here, we have a fair value gap that is on the time frame above the 5-minute. So on the 15-minute, we have this 15-minute fair value gap. Okay, so the sweep of that 5 minutes and not following through is not too crazy. But now looking at 2 candle rejection, that's not the nicest rejection. See if we have something on the 1 hour. We do not. So here we are overall consolidating a little bit, and that leads me to, again, have a justified reason to worry about this potential sweep right there, which might lead to consolidation or a little bit higher prices right there to then continue lower. If we do want to continue lower, then I would want to see new confirmation that we actually want to continue lower again right there, because we are leaving behind a nice no resistance area sitting right there as well. Definitely something we can take a look at. Let's add it to the live list actually right here. Let's see. Oh wait, I believe I did it with a blue list. I'm not sure where it went. Let's do it like this. Perfect. Perfect. Let's see. We have some questions as well about the spring enrollment before we move on. Could that be that the case in a dollar targeting the potential weekly value gap? Exactly. Perfect, AG. Perfect. That's a perfect understanding. Exactly. Let me see really